I got a little bearish in February because I thought market expectations were too high. We had run ahead of the market, earnings growth was not coming about. Expectation from government was too much in too short a time. And I sold a lot of my leverage positions in February and March of 2015. We have had a correction since then, and we went from 5100 to 9100. And then, we are between say 7,600, 700 to 8,200, 300. To my mind, I think we are at a bottom or we are near a bottom. Because expectations are bellied, there is not much speculative positions in the market. A lot of the selling has come from the FIs, but it has been absorbed by the local institutions for the first time. Right? There is a lot of flow into Indian mutual funds, which I think is just going to accentuate. And I think the Indian economy is on upturn. Question is 6, 7, 8, 9. The Indian economy is on an upturn, and the upturn is going to accentuate and get better with time. And I don't therefore see any reason, and I don't, to my mind, why and how should equity go up. I think the only joker in the pack could be I think my personal opinion is the dollar, they link a lot of the emerging market to dollar values. I think the dollar is peaked. I think short dollar is a very good trade against all currencies. And I personally believe that an increase in the interest rate is already discounted because this is talk going on from August 2013. If markets do not discount something in 30 months high, then when will they? And also I think the announcement of this increase, which I expect on Wednesday, is going to come with a statement that the next increase is always going to be very, very measured. Right? The only joke in the pack, according to me, is there is some appearance or some kind of an anxiousness in the US credit markets. Believe me, this can be really disastrous. So I think let's have a look at that angle very, very carefully. I think apart from that, I think there's no way the Indian markets are going to go down, they are going to go up.
But before I get into India specific factors, let's talk about the most anticipated event of this year, which is the Fed rate hike. It is the most anticipated event, yet markets are nervous in the run up to the event. There's chaos in oil, there is chaos in commodities, there is chaos in the US junk bond also.
Chaos in oil and interest rates I don't think are linked to each other. Right? I don't think commodities and interest rates are linked to each other. The euro has already has come up from 1.5 to 1.10, even before the interest rate has been increased. And so after all, the difference in interest rates is going to be reflected in the 10-year yields. Already the US yield is 2.15%, German yield is 40 basis points, the Japanese yield is 20 basis points. And I once for believe that neither the ECB nor the Japanese are going to now increase their quantitative easing. Because they have, I don't think there has been a benefit in compensate with the increase, with the ECB, with the quantitative easing that they are doing. And already large amounts of quantitative easing already being done, I think $60 billion by both a month. So I for one think the reasons why the dollar should gain are no longer there. And there is a one-way trade in the world long dollar. So I think the factor by which a bullishness in the dollar leads to a decline in emerging markets, I think is no longer exists. India is in a very good enviable position because lower commodity prices benefit us. We have good discipline on the fiscal front. Macro wise, you never had it so good. And I think there is no question this earnings, this change has to filter into earnings ultimately. Only thing I feel, other thing which could disturb markets over the next 6 to 12 months, I think now the banking crisis in India is going to come to the fore. And like all crises, it will come to the fore and it will be handled. So what happens to Indian banking NPAs and what happens to the trade cycle in America, I think are the two jokers. Otherwise, I see no way, how Indian markets can go down.
2008 experience has taught us that everything moves in a synchronized manner. It's a flat world. I can prove on paper that India is the best emerging market right now. So in 2016, do you think we will break out of the pack? This year we've got hit because of global flows, but will we break out going forward?
See, I don't look so much about India as what's happening to other emerging markets. I look on India as an independent country. And I think this will be broken, maybe not tomorrow, not next year, not maybe after 2 years, but ultimately broken because I think the flow of foreign money into Indian markets will be far lesser than the flow of local money. This is a synchronization because the foreign money is very important in a lot of markets. And I see no countries, you look at Brazil, look at China, look at Russia, look at Turkey, look at Malaysia, look at Indonesia. India is having the best macros. And India is poised to have the highest growth in the world. So I see no reason why India will not break out of the pack.
So let me take the clock back and talk about the importance of macro. In 2013, we had horrible macros and yet markets went up. Right now, we have near perfect macros and markets are not moving up.
Yeah, because we were discounting in 2013 and 14. What happened today? They always say, no, buy on the rumor, sell on the news. But, and it is nothing wrong. I mean, I for one, when the market went from 5,100 to 8,700, 8,800, I thought markets had gone ahead of themselves. They corrected. What's wrong in it? I for one don't believe. I believe we are in a very big bull market. I don't know whether it's the mother of all bull markets, right? But I know the mother of all bull markets are ahead of us.
So you want to revisit your prediction which you made in May 2014 that mother of all the bull market lies
still ahead of us? Absolutely. Have you seen India's best growth come? I don't believe. I think India is going to go 9-10% for a decade, 2 decades. Is the savings, financial savings only is 2-3% only going to come into equity? I think 15% will come to equity. Right? So both in terms of fundamentals and technicals, the best lies ahead of us.
Last time when I interacted with you at least a year back, that time you told me that you are fully invested and your commitment levels were very high. So what kind of commitment levels do you have right now?
Well, I lightened my commitments in March, April, but I'm back fully committed. I'm fully committed.
And this
both
time
leverage on my trading, on my investments.
So for an average long-term investor, should they bet big right now or should they approach this market with some caution? Like 2013.
Well, all investors, all long-term investors, I say, especially who are not professional investors, I say use the SIP.
Yep.
So you will get the best of all the markets. But I feel this is a good level in the market. Having said that, I feel this is a good level to buy in the market.
The pain point for this market clearly has been not the macro but earnings recovery. Why do you think markets went wrong in judging the earnings recovery? You think there was too much of hope built in?
Well, there has been good sectoral earnings growth, automobiles, pharma, software, right? Now see, the Indian economy is taking more time to pick up than than was normally anticipated. Also, we had 2 below par monsoons. I think we can look forward. I mean, we never had 3 bad monsoons at a row. We can look forward to a good monsoon. And I think also, 2-3 things government, defense, railways, roads, ease of doing business. I think this is going to make GST. All this is going to make a lot of difference. And I think defense, railways and roads. These are 3 things now which are going to come. The actual effect, the actual orders are going to start releasing. And the effects will be felt. I for one predict India will be a very big arms export in 10 years.
There's something you've been mentioning on various public forums that what happened to Indian pharma industry will happen to Indian defense industry.
Absolutely.
But despite that, I don't see that you have too many large investments in the defense space.
Well, there is no singular investment. I had made an investment in Bharat Electronics. I made 50 times my money. I had bought in 2003. I sold in 2008. I never bought it after that.
What is your broad view on the Nifty for 2016?
Well, the direction is upward. Who knows the depth?
So, will the recent decline of 7,300, 7,400 act as a bottom for the Nifty?
If you ask my innate feeling, I think we made a bottom.
You made a bottom.
I mean, that's what my feeling is. My only worry is this US credit market.
Do you think rather than getting fixated with the Nifty, we should look at individual stocks because you've got a very different market dynamics right now. Foreigners are selling, they own large cap stocks, that is capping the Nifty upside. Domestic institutional investors are buying and they are buying mid cap stocks. So you've got 2 parallel markets, large cap not doing anything, mid cap is where the party is on.
Well, I don't see, it's a myth that finally you own in the mid caps. The large caps ultimately give you better percentage returns. Maybe less excitement. And it's not that the domestic institutions are not buying large caps, right? And I think I would be careful in buying some of the small caps because I think market is extrapolating 1 quarter into many years, and a lot of excitement on mid caps. Be careful.
So, to your mind, how far are we actually away from the earnings recovery? And the reason why I ask you this question is because markets will start pricing in earnings recovery at least 6 to 12 months before the actual earnings happen.
No, that may not happen because market priced it in, but the recovery did not take place. And they say once markets are proven wrong, then they get very furious. But I think I'm I personally anticipate this quarter results will be good, right? Maybe not in software. And from fourth quarter, I think we should see the recovery.
If I look at the screen, it's very interesting. L&T at a 52-week low, BHEL at a 52-week low, Bharti at a 52-week low. These are good companies and they represent the core of the economic recovery. So are markets saying that they don't believe in the economic recovery at all?
No, but they are also hit by competition. BHEL, I think, is hit by competition as much as it is by the economy. Same for Bharti. And Bharti in anticipation of competition. Yes. And Larsen and Toubro, I think the problem there is the BOT projects they took up. And I think they are stuck in the Hyderabad metro. They made such a large commitment of 14,000 crores. Also, I think they took some lot of silly projects in the Middle East. So, I mean, but still Larsen is still well valued. It's not very cheap.
So, what will lead the economic recovery? Will it be consumption will it be consumption or will it be government spending? Because consumption will pick up as inflation has got crushed. Investment cycle will pick up because government is spending more.
No, the investment cycle will pick up, and if consumption picks up, then investment cycle by itself will pick up. Because you need some investment to produce. See, Nikunj, the recovery is there. I think it will accentuate with time. How much it will accentuate, how much, when, we don't know. But the fact is that the trend is upward.
Which is very important. Look at the trajectory.
Which is very important, and that trend has been established after going through a very big testing period. And I want to believe that this government doing a lot of things. It's not that they are not doing it. And the effect will come 100%.
So if I talk about the 2 or 3 large, government reforms, subsidy transfer, plan to fix the banks, plan to fix the discoms, more weightage to big sectors like railways and defense, which is one sector you are really excited about?
I mean, I won't go by, the whole economy is going to benefit ultimately. I think one very big reform you read last week's India Today, the way they are pointing the bureaucracy.
Yes.
The cleanliness with which it is being done. See, everything in the world cannot be quantified. There has to be qualitative change. So, and I think first time there's a government which is concerned about India. I think we'll get a lot of foreign investment. Right, Japan has committed such a big investment. I don't know, to my mind, I think there's no way but upward.
If I take
and I reserve the right to be wrong.
Of course. Last time I heard you that bullish, I think was in May 2013 when you went on record, you thumbed the table and you said, I'm buying and I'm a bull. So your level of bullishness, I think, is very high.
Yeah, I'm quite confident markets will go up.
But it's difficult for a PE expansion right now till the time earnings will not come back, because large part of the price gain in 2014, in 2015 has been PE expansion. It's not been earning expansion.
No, but PEs today are still at standard levels. Maybe what discount they had gone into has been recovered. And earnings growth has to come. I mean, also this year there has been a big dip in commodity earnings.
Yes.
Which will not be carried forward again next year, hopefully. So I think that is one area where they'll be leveling off. I think banks may be the worst we will see by March or June. Because now the banks will have no choice but to open their books. Or maybe they will give us 6-9 months more pain. I think that may be the biggest opportunity to buy banks. But please don't go near them until they open their clothes and they show us what really is.
So do you think markets somewhere are underestimating the problems with private banks also? Because with private banks, we think they're the holy saints, PSU banks are the bad boys.
It depends. There are certain private banks, I would say, HDFC and Kotak, I don't anticipate any problems. Others, I don't know. I'm not competent to say good or bad, but HDFC and Kotak, I don't think will have problems.
But in general, for banks, you think the bad news is yet to come?
The worst is just, the bad has come, the worst is still to come.
Okay. There's also disruption happening in the banking space. Technology banks, small banks, payment banks. How will the entire banking landscape change? So one side there is NPA problem, which is because of lending. Second side is the growth problem.
Yeah, but Nikunj, see, when the pace of change, it will depend on the pace of change. Whenever the pace of change is measurable and not very abrupt, then the incumbent is always able to fight back because it has got cash flows. Right? I mean, I was just reading on the Bloomberg, the State Bank to turn itself into a digital bank.
Yes.
So I think banks are going to be able to, not all maybe not a lot of them in the public sector will not be able to change themselves. But then they will become another MTNL and another, BSNL and another Air India.
But your thesis for Federal Bank and Karur Vysya Bank is still intact because that's one space where disruption is happening.
Let me not talk about my investments. I'm still a shareholder. I intend remaining a shareholder.
What I'm trying to gather from you is that are you worried about the disruption which is happening in the banking
Any
space?
investor should be. But Federal Bank is a very tech-savvy bank.
Are you are you confident about what's happening in Federal Bank because Shyam is trying to turn things around. So far things have not turned around.
Well, all that I can do is hope.
So as a shareholder, as a long-term shareholder, you're committed to keep your investments intact in banks.
I don't know. I may sell them tomorrow. As of this moment, I don't intend.
How do you read trends in the pharma space? A lot of good news and a lot of bad news has arrived together. Bad news because US FDA problems are stringent. There's more bad news because there is a price erosion also in the generic market. But the survivors are getting bigger and better.
I am very optimistic in my pharma investments and in particular and in pharma in general. I think India is going to be a very, very, very big pharma player because we have a large home market, we are getting the technology, we are getting size, we are very price competitive. Right, Indian companies will spend $400 billion on research. Right, and as far as my investments are concerned, Lupin and Aurobindo, I mean, Lupin has had such a big rise. I'm not bothered. 600 to 2017, what is the problem? And Aurobindo is doing extremely well. It doesn't correct it all.
But the challenge for Lupin, Mr. Jhunjhunwala, could be that Lupin for the longest time has been a zero debt company. Now they've gone and acquired Gavis. They may also, import a lot of debt. Their margins may not be 30% plus what they've reported, in 2-3 quarters ago.
See, I having seen Lupin's track record and background, and having known the quality of the promoters, they might make a mistake, but they're not going to make a mistake in a hurry. They're extremely careful. And they believe in content and not form.
So you're not worried about the capital allocation?
Not at all.
When we interacted in May 2014, you said that a company like Aurobindo Pharma deserves to trade at a P multiple which should be north of 20. We are almost there. The company is growing. They've got good things going in the US generic business. So do you see growth for Aurobindo Pharma for next foreseeable future?
No, but even if the P is peak, the earnings can grow. No?
Okay.
Suppose if P is peaked and earnings grow by 25%, you can have a 25% gain. I don't know whether what the P at the moment is. But I think long term it's a very good story. It's going to grow, right? And they have a lot of filings. They're doing well, and I'm an interested party, please.
Of course. You're bearish on commodities, you're bearish on crude. Is that the reason why you're bullish on airlines?
Not at all. Maybe that's 25% of the reasons.
So what makes you so bullish on the airline sector?
But I'm bullish on Indigo.
Of course. That's public knowledge.
Right, and they have 85% capacity utilization. There are no planes on order. They are cost leaders. They are cash generators. Right? They are not taking money in Swiss bank accounts. They've taken money in India, paid taxes and paid dividend tax and taken the money. Right? Any aircraft manufacturer can give you in the Swiss bank accounts. And there's going to be growth. There's going to be pricing power.
So you typically like companies which are gaining market share in a tough environment. That's what Indigo has done.
They are leaders. There is growth. I don't think there's adequate capacity coming up. They are cost leaders also, right? And they have an attitude. They know what they want to do. They're very focused. I think it's
So if my numbers are right, I think Indigo is the single biggest investment of your life, the initial investment.
No, I made larger investments.
Okay, but it's one of your large investments.
Yeah, it's a very large investment.
Why are markets giving Tata Motors such a stepmotherly treatment? The problem in China is well documented, but US markets and UK markets are growing.
I mean, we don't. I'm extremely bullish, and I made the largest investment in life in telco. Not
okay.
But I am extremely bullish, and I see no reason why telco will not go.
What about the near-term challenges? The biggest challenge for Tata Motors is that they don't have a large market share in the passenger car market.
How important is the passenger car market to the business? It's nothing. What is important first is Jaguar, Land Rover. Second, the Indian HCV market, the LCV market. Then the Indian passenger car market. Right? And they have a long-term scheme. They have tried to introduce a lot of models, a lot of cars, invest money. Let us see how it comes about.
If I look at the agrarian economy is under intense pressure. bad monsoon, commodity prices have come down, government is not increasing the minimum support price, and I think that is visible in two-wheeler sales, in agrochemical sales, in tractor sales. You got two large investments there. One has done well, one has not done well. Rallis you've been holding for about 10 years now, Escorts you've been holding for about 3 to 4 years now. You think the rural economy will come back?
No, I'm holding Escorts only for 1.5 years.
1.5 years.
And I'm holding Rallis for the last 5 years. The agrarian economy has to come back, there's no way out. Right? And also in agrochemicals, the problem was further compounded because India is a large exporter. And because of the drought in Brazil, the economic conditions there, the agrochemical consumption went down in the largest market in the world. And see, in a large portfolio, some stocks always have problems. There were 2-3 year periods in my life when Lupin never went up.
Yes.
And I sat through that. So, sir, it is, everything is not going to shine or smile at the same time.
Of course. Is the worst behind Titan? Do you think the golden harvest problems have been taken care of?
I don't know whether it will be known in the next quarter that, without even golden harvest or some semblance of golden harvest coming back, what kind of a sales growth do they have? But I personally believe with Titan's fortunes linked to the Indian consumer, especially the urban consumer, if urban consumption is set to grow, then maybe the worst is behind us.
What do you make of the disruption which is happening in that space? Retail has got disrupted. Apple Watch is going to be changing the dynamics of the watch market. So how will things change now for that company?
See, I'm not worried about the disruption of the e-commerce, because finally, what are you going to sell in the e-commerce? You're going to sell watches.
Yes.
You're going to sell branded goods, and I think that Titan has prepared and is preparing a very adequate response. That's what I'm told. As far as Apple Watch, see, watch as a category itself has become from a utility to a fashion, right? And even Titan is now coming up with a what do you call smartwatch.
Yes.
So there has been disruption, but Titan is fighting back.
Interesting investment you have is MCX, and the reason why I want to revisit MCX is because in commodity exchange may not do well when there is a bear market in commodities. Numbers are also showing that volumes are coming down. Is that investment giving you second thoughts?
No, I don't think that necessarily. In India, gold consumption is not going to go down, and it is the primary center for gold and silver. And oil also, maybe little volumes will come down, but I don't see any replacement for it. And if they are able to introduce, if SEBI is to allow them to introduce options and futures, then I think if they are having the highest volumes, they'll take the cake.
Within the NBFC space, last time you told me that you were extremely bullish on housing finance companies.
Yeah.
Is that thesis still intact?
Yeah, I have 2 investments in that.
So within the NBFC space, can I say that for long-term investors, HFC stocks or home finance companies could be good compounding machines?
Yeah, I think at least the growth, the profitability will grow. I don't know how much the price will grow.
So you think the retail, because alternates are doing very badly, which is gold and real estate. 2016, the retail domestic money, the retail money will be the differentiating factor.
Yeah, it will be, because Nikunj, I only apply one thought. Let's see, in debt today, I can get a return say of 8% or 9%. Post tax, I get 6%. In equity, if India is to grow nominal 12-13%, corporate profits will grow 15 to 18%. Therefore, I don't see any reason why, if I invest money in SIPs and I invest throughout, will I not get a 15% return post tax? Now, common sense will appeal to investors. It's a liquid investment. You can borrow against it, right? There is satisfying price discovery. You go to sell a flat, there are 3 different prices.
Of course.
So I see there is no reason why money will not pour into Indian markets.
Let me ask you a very simple question. What is your short-term market outlook, medium-term market outlook, and long-term market outlook?
Well, until 20th of December, uncertain. Then medium-term bullish, long-term.
You have a piper effect. When you speak on TV, you are expected to say something big. So what is your big prediction for 2016? Because you rarely speak to us now, and when you speak, it really matters.
No, I would like to tell investors that, please, I have no magic wand in my hand. When I buy a stock, I'm as nervous as you are. Right? When I was signing the check to put the application on Indigo, my hands were also shaking. Right? So I don't know. My broad views may be important. My specific views, I think, are unimportant.
A lot of our common friends tell me that Rakesh Jhunjhunwala has a new mantra in his life, which is बीबी के साथ रहना, बच्चों के साथ खेलना.
बीवी के साथ तो रहना ही पड़ेगा, चॉइस क्या है? नहीं, बीवी के साथ ही रहते थे, बच्चों के साथ ही खेलते थे.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.